If Ether jumps 1000%, could BitMine rise even more? BitMine is the world's largest Ether treasury, targeting 5% of all Ether. But this isn't just about owning crypto. It is a strategy that could deliver outsized returns beyond the gains in Ether. BitMine's goal is to increase shareholder value by buying Ether to hold and increasing Ether held per share. They believe that large ownership will result in outsized benefits. That is why they target to own at least 5% of all coins. They call this the Alchemy of 5%. They also help to support the network by active participation in its protocol. The sheer speed at which BitMine is moving ahead is stunning. What took MicroStrategy 1,500 days to reach in treasury holdings, BitMine achieved in under 200. BitMine is moving fast. They already hold more than 3% of all Ether, and they got there within just a few months. This shows how quickly BitMine is growing the total value of its investments. But Ether is more than a crypto. It powers stablecoins, smart contracts, and tokenized assets. Its real-world applications are expanding fast. This makes it one of the most attractive long-term investment themes of this decade. Tom Lee, the chairman of BitMine, was one of the first analysts to predict Bitcoin's rise back in 2017. The company is also backed by well-known investors like the Founders Fund, Bill Miller, Pantera, Kraken, and even Galaxy Digital. Why could this be the next big thing? Because Ether's role in powering stablecoins highlights its real-world importance. Most stablecoins run on its network. The Genius Act gives companies a legal path to issue digital assets. This should motivate banks and also other enterprises to take this next step, which could totally change the financial system. Ether and its layer 2 networks now process more stablecoin transaction volume every month than PayPal does in a year. Stablecoins are creating new demand for US treasuries. This should lower borrowing costs and bring millions of users into digital finance. The crypto industry has long predicted that real-world assets would be tokenized on the blockchain. The CEO of Robinhood said that crypto and traditional finance will fully merge in the future, and stablecoins are an early example of that. He added that crypto has advantages over traditional systems, and in the future there will be no distinction between the two. The tokenization market is expected to grow from $600 billion in 2025 to nearly $19 trillion by 2033. For example, tokenized stocks are still very small. They are worth only about $500 million. Compared to the $135 trillion global stock market, that is just around 0.004%. If just 1% of stocks become tokenized, the market would reach $1.35 trillion in value. So the potential would be a 2,600x over today's value. Ether's proof-of-stake model gives it a big advantage, because Bitcoin does not generate income unless the price goes up. But Ether holders can stake their coins and earn around 3% per year. If BitMine reaches 5% of Ether's supply, it would have about 6 million tokens. The staking rewards from that amount could be substantial. At $15,000 per coin, it would generate an annual reward of around $2.7 billion. All these rewards are paid in Ether, not in fiat currency. That means that BitMine can either keep those coins or it can sell them to pay dividends to investors. This is a very interesting value proposition, because it would make it kind of a hybrid of a dividend and a growth stock. And you don't have many of them in the market. So I believe that this could increase and also widen the pool of potential investors. If you look back over the last couple of years, Ether's value in relation to Bitcoin fluctuated a lot. Sometimes there was a strong correlation, while other times the two almost decoupled from each other. But the long-term average ratio is around 0.0479. So basically this means that Ether on average was worth 4.8% of Bitcoin's value. This means that, as you see it on the screen, there could be a huge upside. This is a slide from a BitMine presentation deck, by the way. Based on the long-term average, if Bitcoin trades at $250,000, Ether should trade at around $12,000. But the all-time high ratio was 0.087 compared to Bitcoin back in 2021. If it would reclaim that all-time high, and you imply a $200,000 Bitcoin price, then Ether should be valued at $17,500. But Tom Lee believes that because of the utility value of Ether, it should trade at a higher ratio than in the past. He argues that the fair long-term ratio should be around 0.25. So he basically believes that Ether should be worth 25% of Bitcoin's price in the future. That means that if Bitcoin is valued at $200,000, Ether should be worth $50,000. But if Bitcoin reaches $250,000, then Ether could trade at over $62,000. Then again, if Bitcoin goes even higher, like $300,000, Ether could be worth around $75,000. To be fair, this is more of an art than a science. A lot will depend on how fast, how deep, and how wide the adoption is going to be. But we will probably see exponential growth over the next 10 years. And generally, I'm very positive and very bullish about the long-term potential. Why would someone choose to invest in BitMine instead of directly buying Ether? For some investors, BitMine may feel like a safer choice. It is a publicly traded company listed on the stock exchange. It provides regular updates and transparency. So for those who are new to crypto investing, BitMine can be a better starting point. It offers exposure to Ether without the need to manage wallets or private keys. But there's another key factor, and that is the potential upside. Because BitMine stock could rise faster and by a greater percentage than Ether itself. The same happened with MicroStrategy. If you look at this slide, you can see what happened there. While the price of Bitcoin increased by 10x, MicroStrategy shares increased by 25x. That means that out of the 25x, only 10x was driven by Bitcoin itself. Investors rewarded the treasury strategy with another 15x on top. A crypto treasury stock could be an attractive alternative to owning the crypto or the ETF directly. The reason for that is that a treasury can unlock growth that owning the underlying coin outright doesn't capture. Here's the bottom line. Based on the case study of MicroStrategy, if the value of Ether increases by 1000%, BitMine should have the potential to increase by 2500%. This demonstrates the potential upside from a smart treasury strategy. Of course, that premium is uncertain, because no one knows how much extra value investors will assign to BitMine in the future. It might not follow MicroStrategy's exact path, but the potential is clearly there. Over time, BitMine stock could outperform Ether significantly. And one thing is clear. If anyone can make this a success, it is Tom Lee. With his experience, he is best positioned to guide BitMine's future growth. The strong institutional and retail support should also help BitMine to grow faster. And with time, it could become one of the most important players in this next phase of crypto adoption. Thanks for watching, and please give it a like, subscribe, and watch another video. See you in the next one. Thank you. Bye.